Joining us now, U.S. Trade Rep Jamieson Greer, just back from Sweden. I'm sure he's not jet-lagged, but he has some news for us tonight because we understand not only do we have the European trade deal, we have the Indonesia trade deal, we have the Philippines, we have Japan, but now a new deal with South Korea, and this is another big one. Please tell us, Mr. Trade Rep, what this deal is.
Sure thing, and great to be with you, Laura. Korea, as you know well, has always been very challenging on trade for the United States. We've had an agreement with them in past years, but our trade deficit with Korea has continued to be extensive. However, President Trump has raised the natural leverage of the U.S. market to really obtain some significant concessions from the Koreans. The first part of this is really an investment and purchase deal where the Koreans are going to essentially provide the president and the government, the U.S. government, with the ability to invest $350 billion in important industries like shipbuilding, which is very critical for us. They're also going to increase their energy purchases to $100 billion over the next few years. And then there's the trade piece of this, too, where non-tariff barriers we've had on agriculture and industrial goods for years will be eliminated as we work with our Korean partners. I mean, this is exactly the sweet spot that President Trump is hitting with trade partner after trade partner, and he's done it tonight with South Korea.
Well, that's a big deal. I know he struck a deal with South Korea in his first term, but this takes it to another level. On this issue of buying U.S. energy, we're talking huge sums of money. You may have seen the New York Times kind of hit piece on this because they're not buying this rosy portrait of the EU's pledge to buy U.S. oil and LNG. And they write that their commitment to purchase $250 billion in energy resources from the U.S. every year through the end of the Trump term, that's a huge jump from the $70 billion it now buys. Analysts say it would almost be impossible to meet that sales target. It also goes on to say a significant change in fossil fuel use in Europe, of course, one of the world's biggest economies, could affect how quickly the Earth's atmosphere continues to heat up, and basically that the fate of billions of people around the world is in jeopardy. Mr. Secretary, apparently you're going to be killing the planet, and they're not really going to buy any of this energy. That's the New York Times take on that.
Well, let me make a couple of points. First of all, the energy purchases, that was one of the first things that the Europeans brought to us. So that did not start out as a demand. It started as an offer from them, which, of course, the president leveraged into an even larger offer and larger sum. So this was something that was their idea. If you go back and look at a variety of think tank reports that have come out over the past year about the lack of competitiveness in the European Union, one of these things has been about energy. And so the current European Union leadership, they're actually being much more pragmatic than they have been in the past, and they themselves acknowledge that they need to have a better energy policy. And by the way, instead of getting the fossil fuels they do use from Russia, they'll be getting it from us.
Well, and Mr. Ambassador, does that mean that this is going to be measured on a quarterly basis? Or because you know how this always works. They'll make a pledge, and then they'll give a little bit here, a little bit there. Then they'll try to run out the clock on Trump's term. And then by that time, people have moved on to the next issue. So, but is there a check-in with how much money is being given to what sector on a regular basis that they must meet, or that tariff will jump up?
So we will constantly be monitoring enforcement. I have an entire office at the U.S. Trade Representative that monitors compliance with trade agreements. The Commerce Department is also involved in this deal on the investment side, and so they will be monitoring and working together with the Europeans. The Commerce Department has an investment accelerator that's designed to help implement all of this. So it's really a collaborative deal. It's good. It's good for the Europeans, and it's good for us. It's in everyone's interest. So while we'll be monitoring compliance, we're confident that they're going to deliver.
And the extra money that Europe pledged was on behalf of private corporations, was it not? So how do you police that? There were hundreds of billions of dollars additionally that private corporations are going to have to invest, which is different from U.S. companies reshoring American manufacturing, because could the industries be giving money to foreign companies operating in the United States? Just clarify that for us.
Sure. So the Europeans agreed to an additional, $600 billion in investment over and above, the $100 billion that we would expect over time. And so again, the Commerce Department will be working with the Europeans to monitor these developments. Our expectation, and frankly, European companies' desire, is that they come here for a lot of greenfield investment. In other words, new investment for new factories to service this market. Remember, we're keeping a 15% tariff on the European Union, and so it's naturally in the interest of European companies to come in, build here for this market. And we welcome that kind of investment where it's a new factory with new jobs, and that's what we expect to be coming.
Mr. Ambassador, Jerome Powell did not lower interest rates today, but did make a comment about tariffs. Let's listen.
Increased tariffs are pushing up prices in some categories of goods. Their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed.
Your reaction to that? He said, well, they could do this or they could do that. We're not changing the rates.
I mean, listen, every time I hear somebody say, we could see this, we could see that, my response is that we have had substantial tariffs in place since early February on some of our largest trading partners. And every time I see a commentator or a think tank person or a talking head say, well, it's just not showing up yet. It's not showing up yet. I mean, my question is, if it hasn't shown up by now, is it going to? I mean, this is something that the Treasury Secretary and the President, we all monitor this. We watch for this. Tariffs, if they have a price change or something like that, that's something that you would expect to see one time early on and not years down the road. In the first term, President Trump imposed significant tariffs on China, our largest import source, and inflation actually went down during that period. So that relationship is not clear at all, and I don't think it's nearly as direct as the Fed chairman is saying.
Well, why is the president meeting? He met twice in recent months with Jamie Dimon, one of the most important financial CEOs in the United States, J.P. Morgan, just crossed the Wall Street Journal. People speculating about that, what that means. What can you tell us?
Well, I would say the president meets with a lot of people all the time. I think it's natural for the leader of the free world to meet with important financiers and figures in the business community. I'll point out, since you mentioned it, a couple months ago, someone asked Jamie Dimon about the tariffs, and he essentially said, "Get over it."
Yeah, he got it right,
and we'll work with it, right? So,
yeah.
so I'd be talking to him too if I was the president.
He got it right, and I'm really glad to see what you're doing with India, which has been one of the most notorious trade cheats on the face of the planet. I loved seeing what you guys were doing with India. But I love tariffs. I say this every night. I love tariffs. I would just do tariffs and no deals personally, but you guys have an interesting investment portfolio. We'll see how this all works out. It's exciting. Mr. Ambassador, thank you very much.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.